Hello and welcome. In this video, we will learn about inverted hammer and hanging man candlestick patterns. Okay? But before we learn these two patterns, I want to tell you few more things about the candlestick patterns that we had learned in previous videos. Okay? Now, this is the chart that I had taken for explaining hammer candlestick pattern. Okay, so the stock is in downtrend and we get a hammer. All right. Now you know that there are three kinds of entries for this. One is risky entry, that is, as soon as you detect that a hammer is being formed, you enter the trade. Okay, that is a risky one. Second is you can look at the hammer's low and see if there was any support before. Okay, so that is one way to make your trade safe. And the third one is to wait for a price confirmation, that is to wait for a candle to close above the high of this hammer. Okay, and if you do that, if you do all three, then it would be considered as safest. Okay, now for this trade, here will be the stop loss, this will be the target, and if we look at it, the target was achieved. Okay, now let me talk about the entries. See, according to the books where they teach about candlestick, they have different opinions. Some say that the price confirmation must be obtained in the very next candle itself, meaning this is the hammer, correct? In the next in the next candle itself, we must get price confirmation, meaning the next candle itself must close above the high of the hammer, which we did not get here. Okay, which we did not get here. So according to that rule, we should not have entered this trade at all. Okay, because we did not get the price confirmation in the next candle. Okay, some say that it is fine if you do not get it in the next candle, but you have to get it in the second next candle. Okay, so here if you look at the hammer and if you look at this candle, you don't have a price confirmation, meaning this candle doesn't close above the high of the hammer, but the next candle, this candle closes above the high of this candle. Now this is acceptable, okay, according to many traders. And when this gives you price confirmation, you can enter here and your stop loss and target would be the same. Alright, so these are the variations that you can see in different traders. Some say that you must get price confirmation in the next candle itself, and some say it is okay if you get it here. Okay, but if you don't get it here and if you get it in the third candle, then it is of no use. It doesn't matter if the trade goes according to the plan. We will not be entering if we do not get price confirmation in the next two candles. Okay, this is one thing. Next, what I want to say is, according to books, the price confirmation is in relation with the close of the candle, meaning what the books say is we have to get a closing price above the closing price of the hammer. See, this is a red hammer, correct? So the closing price is here, down. Meaning in the next candle or the candle after that, the closing price must be higher than the closing price of the hammer. Okay, so this is the closing price of the hammer. Now according to that, this gives us the price confirmation. So this candle closes above the closing price of the hammer. So we can enter the trade here. Okay. Some other book says that we have to wait for the price confirmation above the high of the hammer and not the closing of the hammer. So here is the high of the hammer. This candle did not close above the high of the hammer, but the next candle closed above the high of the hammer, and so we enter the trade. Okay, so there are two variations here also. One is that the price confirmation is in relation with the closing price of the hammer. Other is that the price confirmation is in relation with the high of the hammer. Okay, now let me tell you what I do. I first see if the price is in downtrend. Then if I get the hammer, I check back if the hammer is formed at a support. If it is formed at a support, I will consider this for further analysis. If there is no previous support, then I will discard this trade. Okay. Next, if I have a support, then what I will do is I will see if the next candle or the candle after that closes above the high of the candle. Okay, I do not consider the closing price of the hammer. I want a candle which closes above the high of the hammer. Okay, so here we have that, and here I would be entering the trade. Alright, so this is what I follow. This is my rule. Please form your own rule and stick to that. Okay. Next, this was the chart that I had taken to explain you the shooting star. Okay, price was in uptrend, you get shooting star, and we have our stop loss here, target here, wait for price confirmation, and the target is reached. So here in the next candle itself, the price confirmation is obtained and you can enter the trade here. Okay, now see, this is a bearish reversal candle, meaning this candle denotes that the price will come down from here. Now if you are trading in futures or options, then you can sell futures here or sell options here or buy put options here. Okay, if you know about futures and options, then what I'm saying will make sense to you. If you do not know what futures and options are, do not worry about it. I have made a playlist, you can go and watch. Okay, but if you are trading only in stocks, then you cannot sell stocks today and buy them tomorrow. You cannot go short for few days. You can do short or you can sell the stocks only for intraday. Okay, then the question comes, if this company doesn't have futures or options, how will this pattern be beneficial? Now this will be beneficial if you have taken trade here or previously. Okay, if I had bought stocks of this company here or here or here or here or here, then I would be exiting them here. Okay, so I buy here and I sell here. That is the normal trade. Buying stocks first, selling them later is normal trading. But selling before having the stocks is called as short selling. Okay, do not worry much about it. So by looking at this pattern, you can come to know whether it is the right time to exit the trade if you had taken trades here. All right, yes. Next, The pattern that we are going to learn in this video are inverted hammer and hanging man. Now, inverted hammer has exact same qualities and rules of shooting star. So I won't explain them once again. Okay? But the thing about inverted hammer is that it appears at the bottom of a downtrend. Okay? At the bottom of a downtrend. And it represents price reversal from there. Okay? That is the only difference here. So let us look at a chart now. This is the chart of ICICI Bank and time is 5 minutes. Okay, 5-minute duration chart. Price is coming down and you look at an inverted hammer. Okay. Now when you look at an inverted hammer, you have to place the stop loss. Now where will you place stop loss according to our rules? You will be placing here, correct? Below the hammer. Below the inverted hammer. Right? Wrong. You have to place it below this because the price had gone till here. Correct? The price had gone till here. So below this low, leaving some buffer, we have to place our stop loss. And our first target will be the place from where the price had started moving down, which is here. So our stop loss would be below this candle and not this. And our target would be somewhere here and the trade has gone in our favor. Okay. Now if you see the trades, you can see that the price had come below this level. Correct. So if you had placed your stop loss here, then here you would have exited your trade. Correct? But since you have placed your stop loss here, the stop loss has not been hit and you have achieved your target. Okay? Alright. Now let us understand the psychology behind this candle. Okay? Price was coming down from past few days, or in this case from past few minutes, since this is a 5 minutes chart. Okay, so from past 20-25 minutes the price was coming down. Bears or the sellers were in control, and then this candle appears. What does this candle denote? It denotes that, or it says that, or it is saying that the price moved up, meaning the buyers stepped in. The buyers were able to take the price up. But at the end of the 5-minute period, the sellers were able to push the price down. Okay? Here and here and here and here, everywhere, the sellers were in control. But here, suddenly the buyers came in, and even though the sellers were able to take the price down, it says that the buyers have stepped in. Okay? So what you can do is, you can wait for a price confirmation before you take an entry. Okay? If you take an entry as soon as you see this candle, then it would be a risky trade because you don't have a confirmation. The way you get a confirmation is to wait for a candle to close above this closing price. That is one way. Okay? Or you can wait for a candle to close above this high. That is one more way. So few people wait for the price to close above this, few wait for price to close above this. Okay? So you can go ahead with whatever is comfortable. Alright? So this candle here closes above this and also above this. So you can enter here. But if you enter here, the stop loss would be more, or the risk that you are taking would be a lot. Alright? So you can take a risky trade here, and you can take a trade when the price starts to move above this. Okay? So your risky entry would be by looking at this candle and entering as soon as the price starts to move above this price, above this level. Okay? Now, when you are dealing with an inverted hammer, make sure that the hammer appears at a support, meaning look behind and see if you can find a support, and only consider it as inverted hammer if it appears at a support. If it does not appear at support, then neglect it. Alright? Yes, so that is about inverted hammer. Next is hanging man. Hanging man has the exact qualities of a hammer. Okay, so I won't repeat once again. But the hanging man appears at the top of an uptrend. Okay, at the top of an uptrend. And it also signifies reversal. Alright, let us look at an example. So you have price moving here in an uptrend and you get a hanging man. But when you look at this, the wick is not too long, and so we do not consider this as a hanging man. The price still moves up and we get a perfect hanging man. Okay, there is no upper wick, we have bottom wick which is very lengthy. Okay, now where would we place our stop loss? Right above the hanging man, correct? Here. No, wrong. We would place above this candle because the price had gone up till here, correct? Price had gone up till here. So leaving some buffer, we place the stop loss and we wait for price confirmation and we enter the trade. Okay, but here you can see what has happened. This was our target, but the target has not hit. But the next day, the price has opened with a gap and our stop loss has been hit. Okay, so this is a failure of hanging man. Now let us look at one more chart. Okay, the price was moving up, meaning the buyers were in control. And suddenly this candle appears. Now what is this candle denoting? It is saying that at first buyers started to move the price up, but then they were dominated by the sellers and the price started to move down. The sellers took the price till here, but then the buyers stepped in and took the price up and closed it here. So from past few days buyers were in control, and today, or this is 15-minute chart, so here the sellers came and were able to successfully take the price down. Even then the buyers moved the price up and closed here, meaning the sellers have stepped in the market. So what you can do is, as soon as you see this pattern, you can enter the trade, or you can wait for a price confirmation. You will get a price confirmation only when a candle closes below this or below this. Okay, Some people wait for a candle to close below this, some wait for candle to close below this, and some only wait till the price crosses this level. Okay, as soon as the price crosses this level, they will enter the trade. So make sure that you test the pattern a lot many times before you take an entry. Okay, now when something like this appears, make sure that it appears at a resistance and only consider this to be a hanging man if it appears at a resistance. If not, discard it. Okay, so we will be placing our stop loss above this. This would be our first target, and we can enter here or wait for price confirmation, and the price has come down. All right, so this is how a hanging man works. Okay, now you must remember that both inverted hammer and hanging man are insignificant patterns, meaning they do not appear commonly, and also if they appear, you will have to look at a lot of things before you can take an entry. Okay, so be careful when you are trading on basis of inverted hammer or hanging man. All right.